we were talking a little bit, and I interrupted Andy talking about some tools to improve cash management. So why don't we continue where we left off?
Sure. Thanks, Alan. I think the key is once you have visibility and have a cash plan, cash management system in place, which doesn't have to be an elaborate, very expensive system. It could be something as simple as an Excel spreadsheet. I'm a big fan of keeping things simple and spending a very minimal amount of time on this, because I see too many business owners spend just extraneous amounts of time managing their cash, because it can actually manage you if you don't manage it. As we know, cash flow
I would like to suggest if a business owner, if they're doing the cash management themselves, although it's very important, they should really have someone else do it. The price of having someone do it is a lot less expensive than them not being out there selling or producing or running the business. So they really need to have someone running the cash management, giving them the reports so that they can understand where they are, ask the questions, but they need to have management people working for them doing cash management.
Absolutely. I couldn't agree more. We do it for a lot of our clients, but I think it's key that the business owner has an understanding of it, because when there's that big bracketed number that's coming up, a payment coming up,
or as they say, in the red.
In the red is that's coming up, and your cash flow is about to take a big southward dip, especially if that receivable doesn't come in that you're planning on coming in. You have to have a plan for it. And that's what, once you get visibility into your cash flow, now you can start planning. I always say all costs are variable in the long run, and that's where I like to start. You can start with your biggest cost. In a lot of businesses, certainly in the service side, it's going to be payroll. Certainly in a manufacturing environment, it's probably your suppliers. And that's where you can work on negotiating with either new sources or looking at your staffing in your company and start making those adjustments to lower those outflows of cash. At the same time, you may need to increase them because you may have a lot more sales coming in, and you may need more people to manage those customers and to deliver your services or products. So by having all of that incorporated in your cash plan, you can see exactly when these things are going to hit from a peaks and a valleys standpoint.
And sometimes you have to make a decision knowing that you're going to grow in the future and spend money now. I've had a discussion with a client over a situation where he keeps talking about adding a salesperson. And when I say you want to add a salesperson, you're going to add more sales. If you get all those extra orders, how are you going to deliver the orders? You need someone actually as a support services, and sometimes you have to invest in the support services to make sure you're capable of delivering when you get those extra orders. So sometimes you have to look at an investment in the future, and not just the top line, but you have to look at the costs that help you run a business. And we were talking, I lost my train of thought, but we were talking about making sure you sometimes invest, which is cash flow out, to make sure you can deliver. Because one of the biggest things people who listen to the show understand that, and why I ask the question that I start every question is why you're in business. It's how you do it. If you don't deliver, you don't produce and do what you say you're going to do, your customers aren't going to buy from you, and you're going to shrink and you're going to die. So if you take all those extra orders and you can't deliver them, it's just as bad as if you have everything in receivables and inventory and can't pay your bills. Both things can happen that can kill a business. Anyway, any other issues on improving cash management that before we go on to the next topic of conversation?
I think we covered most of the issues, but I think it's important to go down your cost structure, starting with the biggest expenses first and working through and having a long-term plan to make sure that your costs are optimized for your business and flowing that into your cash plan so that you can see when things are going to come. Oftentimes, one of the things that gets missed is when you need to hire a new person, especially on the service side, there's often training involved. And that needs to be part of your cash plan because, again, talking investment, you need to train the people. You need to make sure that person is capable of actually functioning like the other people that you may have that deliver that service today. You need to make sure that person is ready to go because those orders come in. Those customers are going to have expectations, and you want to meet them and delight those customers.
You're absolutely right. Just remind everybody the trivia question is still out there for a gift certificate to the Capitol Grill. What company turned down an offer from Alexander Graham Bell to buy the patent rights for the telephone in 1876 for $100,000 Just a hint, the company still exists today. It did not go out of business because it didn't buy it. It still exists. So please call 410-481-1300 if you know the answer. And I'm having conversation here with Andy Fleischer of Strategic CFO Services. We're talking about cash flow. Now, there's one part of cash flow that most business owners hate, and that's turnaround and cash crisis management. So can you talk about some of the things that you do and you recommend that business owners, first of all, they should try to avoid it by doing all the planning. But sometimes they get in those situations. And I got Adam back on the phone. I think it's the same Adam. Hold the line. Adam?
Yes. Hey, how you doing again?
Fine. Yourself?
I'm doing all right.
So what'd you do? Google it? You found the answer?
Yes, I did. It was the Western Union Company, and I believe it was Hubbard who offered the patent to Western Union back in, like you said, in 1876.
Absolutely. You're absolutely correct.
And he turned it down.
Right. He turned it down. And the compound matters, they then tried to develop a competing product, in which case Bell on the telephone sued him, and they had to pay triple damages in a patent infringement case. So it really made it compounded it even worse. But anyway, if you'll hold the line for Tish, she'll take your information so I can get you that gift certificate. So hold the line.
Thank you very much, and I'll continue to listen.
Thank you very much, Adam. Appreciate it. So we were just getting started and talking about turnaround cash management. So.
Yes, I mean, I have seen several of these instances where you have a company that, once upon a time was doing very well, and all of a sudden it either happens very quickly, or sometimes it's a very slow deterioration, but they get to the point where they bring us in because they've had serious problems. They're trying to figure out how they're going to survive, how they're going to make it. Typically, the business owner is under intense personal stress, and it's not the funnest of situations to deal with. So I highly recommend, as Alan said, we try to manage the cash flow from the get-go and, successfully manage it as we go. But in a turnaround situation, the most important thing is that we have cash, get a cash infusion as quickly as possible. Oftentimes business owners don't look at the big picture, and that's one of the things that I think we bring an outside individual in, such as myself or one of my other CFOs, we can get a really different perspective on the business. And one of the first places I'll go is, do you have any idle or unused assets in the business that you're not using today? Maybe that printing press still has $100,000 of market value at auction. Maybe we can auction and get $100,000 into the business today, and that can relieve maybe half of your payables, help make the next payroll, the next several payrolls hopefully, and give you that infusion to really give us the time to get the strategy in place, because that's the second piece of it. Once we get an infusion of cash, sometimes it's working with a bank. If you have a good banking relationship, we can lever that and get a permanent infusion of cash into the business. But oftentimes to do that, we have to have a plan in place that makes sense.
Absolutely. So, and having been through, which listeners know, through a Chapter 11, I can tell you some of the crisis management that I've gone through, but those are very, very wise comments. Is you've got to look at every asset you have, see what you can sell, what you can use, what can generate cash to help the business. And finally, we talked about super growth, and growth, just the opposite of crisis cash management. Well, not necessarily the opposite. It can create the same kind of crisis cash management when you're growing. So what are the things that you look for and help business owners do when they are growing and sometimes outgrowing the cash?
Yes, very good question. I've had a lot of experience, particularly on the internet side, where businesses grow astronomically overnight. And I think, first of all, the most important thing to understand is it takes capital to grow. And David Packard of Hewlett-Packard fame came up with a formula called Packard's Affordable Growth Formula, because he wanted to grow Hewlett-Packard as quick as he could without borrowing external funds. It's a pretty neat formula. You can look it up on the internet, but it's one of the things that we will utilize with the business owner to understand that if you want to grow 50% next year, if that's your goal and you're capable of doing it, you're going to need to put X number of dollars into the business, and that has to come from somewhere. It can come from your pocket if you have it. It can come from bank financing. You can sell equity, but you need to have a plan in place, because if you try to grow too fast without it, you'll grow yourself right out of business. You won't be able to pay your bills. won't be able to pay your staff. Your people will not be there smiling, taking care of your customers. You'll grow yourself right out of business. I've seen this on several occasions, and it's very important to have this plan in place to make sure that you can address those needs.
And part of that plan might be working with a bank, might be working with some of your suppliers in asking for extended credit over a period of time, or whatever it is to try to increase that cash flow when you're growing. In the same sense, it's cash management in both directions.
Absolutely. I'm sitting down with your bank and telling them that, look, we're going to be growing at a clip of 25 or 50% per year, and we have the ability to do it. Here's the reasons why. Here's the market. Here's the reasons why we can grow this fast. Here's the type of facility we need to grow. Bankers love to hear this, and they love to see a good, financial projection.
I was going to say, with the financial projections over the next 2 to 3 years of what that business growth is going to be, and they'll look at it. If you've been honest and open, ups and downs over the past few years with them, they're going to believe, and you've been on track in the past, they're going to believe what you're telling them and the structure that, and therefore they are more likely to work with you than panic.
Absolutely. Absolutely. They love nothing more. And then when you hopefully hit your first year target because you've executed on your plan and you hit that first year target, your credibility is up immensely with the bank, and they're much more comfortable with extending the additional credit that you may need to get to the next 50% growth level, which can happen very quickly. So I can't say enough about being upfront with your bank, and a good bank is a financial partner in this whole business game that we play, and it's critical that you have a good relationship with them. And if you don't have this type of relationship where you can pick up the phone and sit down with your banker, I strongly advise you to look around and find another banker, because that's the only model that I've seen that's ever worked, is that relationship model from the banking side. It reduces the bank's risk, it satisfies the customers, and we help lots of clients find new banks because for whatever reason their banks become complacent and aren't working with them through the ups and downs in business. And good bankers always work with their clients very closely.
I'll end basically where we started this conversation almost an hour ago. And cash is king.
Absolutely.
And if you don't prepare and plan and know what's coming and where it's going to be, you're going to be in a situation of having substantial problems, business problems. You're not going to have the cash to pay your bills. So it's very important that you have staff that you can trust as a business owner to help you manage your cash, plan your cash so that you know where you are going out 3 months, 6 months, a year, so that you can communicate honestly and openly with your financial team. Andy, I want to thank you very much for being here on the show tonight. And how can the listeners reach you if they want to talk to you about their cash and or CFO issues?
Sure. Well, we have a team of talented CFOs that have an average experience of 25 years in all sorts of things such as strategic planning, cash management, growth and turnaround situations. They can reach us at our website at SCFOS.com. That's S as in Sam, CFO, S as in Sam.com, or by phone at area code 443-823-1930. And we definitely would love to help, any companies out there that need help in the cash flow.